SBI Shinsei Bank will pay depositors in BTC, ETH, and XRP. SBI Shinsei Bank, a Japanese lender with roughly 1 trillion yen on its books, plans to reward depositors in Bitcoin, Ether, and XRP. Cointelegraph reported the move on June 9, 2026, citing the bank's plan to hand out crypto rewards rather than the usual cash interest or loyalty points. A regulated bank of this size paying customers in crypto is a different signal from an exchange dangling yield. SBI Shinsei sits inside SBI Group, one of Japan's largest financial conglomerates and a long-standing backer of Ripple and XRP. A deposit-level reward program built on three major assets reads less like a marketing pilot and more like crypto rewards entering the regulated core of Japanese finance. A bank reward program, not an exchange promo. The mechanic here is the same one that powers most consumer crypto products. Spend or hold, earn back in a digital asset. The difference is who is running it. Holding a deposit at a licensed bank carries different counterparty and disclosure rules than parking funds with a crypto app. And the rewards arrive as BTC, ETH, or XRP rather than as a closed-loop point that only works inside one ecosystem. That choice of three assets matters. Bitcoin and Ether are the two largest assets by market value, and XRP is the token most associated with SBI's own corporate history. Offering all three, rather than a single house token, lowers the odds that the program looks like a thinly veiled effort to pump one asset. It also gives depositors optionality on what they accumulate. The exact reward rate, eligibility tiers, and start date were not detailed in the initial report, so the economics are still open. Readers should treat the headline as confirmation of intent from a verified news account rather than a full product spec. We will update this article as the bank publishes terms. Crypto rewards collide with card cashback. For anyone who already earns crypto through spending, this lands close to home. A bank paying BTC, ETH, or XRP on deposits is chasing the same wallet share that crypto card cashback programs target. One rewards you for holding a balance, the other for swiping. Both end with crypto landing in your account. The overlap is worth watching because the two models stack rather than cancel out. A user in Japan could hold deposits at a bank that pays crypto rewards and still run day-to-day spending through a card that returns crypto on purchases. The open question is whether banks will eventually fold card-style spending rewards into the same account, which would put them in direct competition with standalone card issuers rather than alongside them. There is a risk layer that deposit rewards share with token-based staking and yield products. Rewards paid in a volatile asset are worth whatever that asset trades at when you receive and sell it. A reward denominated in Ether looks generous on a green day and thin after a drawdown. Banks pricing these programs will have to decide how much volatility they are comfortable passing to retail depositors. Timing against an extreme fear market. The plan arrives in a weak tape. As of June 9, 2026, Bitcoin traded near $62,899, down about 0.2% on the day and roughly 9.7% over the prior week. Ether sat around 1,076, XRP near $1.17, and the Crypto Fear and Greed Index read 16, deep in extreme fear. A major bank wiring crypto into its deposit base, while retail sentiment sits near a two-month low, is the kind of contrast that tends to get noticed. It also fits a pattern that has built through 2026. Crypto rewards and crypto collateral moving out of crypto-native apps and into regulated institutions. Wealth managers have started lending against Bitcoin and Ether, and large banks have floated tokenized deposit networks. A retail bank paying depositors in three liquid tokens is the consumer-facing version of that same drift.